Whatever happens in the world, whenever you turn on the news, any day, at any moment in time, they always somehow or other seem to reference what's going on in the stock market because it really affects everything. And you're busy trying to save for retirement, and all these things are happening in the market, the market, the market. What is going on with the market? Well, a lot of people don't understand why it works at all. So in this episode of the Real Money Doctor podcast, that's what we're going to cover. I want to give you the inside track on the markets, what they actually mean, how they move, and why it's really important to you. Now, understanding why the markets move and how they move in relation to charts, because whenever you're talking about markets, they're always talking about the charts, some way, shape, or form. They're talking about the numbers. You don't see the numbers on air, okay? But they're always talking about the numbers on the charts. And people try and use these things to make better investment decisions. And your money's sitting in a 401k, and what's it doing? You have no idea. Okay, you're waiting for a quarterly statement, and you're sort of hoping that something happens. Well, we all want to retire at some point in time. That's why we have those 401ks and the IRAs. And you can really only work for so many hours. So the idea is having your money work for you, and that's what the markets are there for. But what do they really mean? How do they work? And most folks, they're all told one thing, okay? And you heard about this back in school. It's all supply and demand. And well, that's a cute idea. And yeah, there is a big component of supply and demand, but there's a whole lot more going on that you should really know about as to why they actually move. So there's three really basic things you need to know about why the markets move. One, what's going on inside the market? Two, what's the chart actually saying? What's it really telling us? And three, how can they make money using these charts? Okay, because everybody tries to predict what's going on in the future, but we really, really can't. The first thing you know about the markets is it's not really all about supply and demand. It would be nice, would be convenient thought. And the basis of that is all supply and demand. But there's something else that nobody ever really tells you. The real reason the markets actually move. It's because of the crowd. What the hell is he talking about? Why the crowd? It's about the crowd. You watch the news, you hear something on TV, and this stock is going to go up. All of a sudden, everybody starts buying this stock. It's an amazing thing what happens. And the crowd moves, and the crowd moves, and they move, and they move, and they move, and they move. And it goes up, and it goes up, and it goes up until it doesn't. And then you wonder what the hell happened. And what happened was everybody got swept up in the crowd. It's really critical that you stay on the outside edge of the crowd. Now, you've seen this before. Okay, you've seen it on January 6th. Okay, big crowd of people rushing, doing crazy stuff. Each one of those people was an individual person, though. And if you talk to any individual person by themselves, they seem relatively normal. You can have a conversation with them. Things go okay. You put them in a crowd, though, and the whole dynamic changes completely. It's totally out of control, and there is no reasoning with a crowd. The second thing you need to know about the markets is the chart. And for some reason, people seem to think that this is really, really mysterious stuff. And you need a PhD in economics to understand what's going on in the charts. You really, really don't. They're really, really simple. Okay. And the charts only tell you what's happening with the price. Remember, everything that has to do with the markets has to do with the price of the underlying thing you're talking about. I'm going to pull up a chart here in a second. And this chart clearly shows a price bar. Okay. And the price at any particular day shows you 4 bits of information. Open, high, low, and close. Open is where the market opened, the opening price. It traveled up and down during the day, whatever the high was during the day and whatever the low was during the day. And at some point in time, it closed at the end of the day in the closing price. So that's relatively simple. And you read it just like a newspaper. You go from left to right. Opening bar. Okay, little dash there. Shows right on the chart. Little dash. So opening price, went up, it went down. And then at the end of the day, it closed. Little dash on the other side. That's a standard bar chart. Now, they also have a candle chart. This is really mysterious stuff. Came from Japan. Okay, they've been using them there for years. And a lot of people using candles on their charts. Candle is no different than the opening bar price. Same thing, same information. They show an open, high, low, and a close. They represent it differently though. On a candle chart, they have a center part which is called a body. And if it's white, it started at the bottom and moved up the solid body part to the close during the day. So you have an open and close. That's inside the body, that little box on the candle itself, basically. The wick, the high and low, are represented by little lines that are called shadows or wicks that go up or down below the body of the candle. Same information, open, high, low, and close. The handy thing with the candles is that on an up day, they're normally represented as white. On a down day, they're represented as black. So they're easier to see, and you get a representation at a distance, and you can get a quick feel for what's going on in the market. Once you understand a chart, that open, high, low, and close, it took all the mystery out of it. All of a sudden, now you know exactly what you're talking about. Opened at one price, it went up, it went down during the day, and it closed at another price. That's all you need to know about the charts. The third thing you need to know is how those bars, how those prices are represented on a chart and how people use them to make money. So here's a chart. All the little price bars are on the chart. One price bar is one day. Open, high, low, and close for that particular day. And they plot them, nothing fancy. Every day it's a different price. And you can track the price from day to day, week to week, month to month. It's all really, really simple. Now the thing is, people try and use these things to project what the price is going to be in the future. I have no idea what it's going to be in the future. I don't have a crystal ball. I've got 40 years in financial services, the last 28 as a certified financial planner. I've dealt with investments for years and years and years. I've been trained in that. I have no idea what the hell the market's going to do tomorrow. But people trying to make a living telling you what it's going to do tomorrow. They have no clue. But they use these charts and they try and make some projection as to what's happening. Well, that's the biggest mistake you can first make. Okay, you don't make projections. Deal with the price what it actually is. Now, if the market only does three things, I don't care what they're talking about on CNBC, okay, Kramer, or any of the other financial talking head shows. The market only does three really, really basic things. Here's a chart that shows you what they do. It goes up, it goes down, and it goes sideways. That's it. Only those three basic things. People go crazy trying to calculate how far it's going to go up, how far it's going to go down, or how long it's going to go sideways. We don't do any of that stuff. Okay, we just deal with what is. We react to what actually is. Now, the way people do that is they use what's called indicators, and they put something on the chart. And people love indicators. It makes them look like they're really intelligent, like they're really doing something. Okay, and they're really not. An indicator is nothing fancy. Okay? They have software packages for trading and investing, and they have tons and tons of indicators. You can go online. You can go to any commercial. They're always telling you about all the great indicators they have, all the trading tools that they have for you. You can trade from your phone. Yes and no. Okay. The people who trade from their phone are generally losing money because professional traders don't trade from their phone. The indicators tell you one thing. They get the open, high, low, and close, the price of the day, and they plot it on a chart. And they manipulate it in some different way, shape, or form, and they try and tell you what's going to happen. They're all using data that's already happened in the past to try and project what's happening in the future. Because the markets are so unstable, they don't particularly move in a random pattern. Okay, they're not waves that just repeat constantly. They go up, they go down, they go sideways, and you don't know what the next day is going to be. It could be react to anything at all. And what happens is you're used to hearing about indicators. You might not think about it, but if you stop for a second, anytime you're talking about the Dow Jones Industrial Average, they're talking about a 200-day, 500-day, or 50-day moving average to give you some idea. So if it's above the moving average, well, you should buy it because it's going to go up. If it's below the moving average, you should sell because it's going to go down now. So that's the way indicators really work. And it gets interesting, but it's easy to get wrapped up in those things. And they're all fluff. They really are. All we do is look at the price, open, high, low, and close. Reminds me of a student I had not too long ago. And we got on an initial call with him. And he was telling me, this is before he came on board as a student, he had saved some money. He got up to almost $30,000, and he was pretty proud of himself. And it was a good deal. It wasn't a lot of money, but $30,000 to him was a lot of money. And he'd been working for years trying to do this, and he's in his 50s right now. And he got this money, and it really wasn't going to be enough. He knew it wasn't going to be enough for his retirement. And so he's looking at how he's going to build that up. And he knew that he had to do something other than just saving, because it wasn't doing anything for him. So he saw a stock trading course someplace, and he took this course, the weekend thing, 3 days. And he said they're going to be a stock genius. And he learned about the charts and the indicators, and it was really, really nice. And he opened up an online trading account, put his $30,000 into his trading account. Not a problem. It's a good start. However, he's listened to the news, heard about this one stock that was supposed to be really, really good, and he thought that it was going to triple in the next 90 days. That were all the projections from the analysts, the people who really knew, the people that inside track knew this thing was going to go up triple in 30 days, going to go up 3 times in 30 days. Next 90 days, it was going to go up. So he went, he bought $30,000 worth of this stock from $30,000 up to $90,000 in the next 90 days. He felt really, really good. First week happens, it's up at 10-12% or so. He's feeling great now. Made the right decision. He paid for that weekend course in trading. It was a good investment for him. And he did his research. He felt good about that. This is really, really good at this point in time. Second week comes up. It's up another 15% now. He's feeling phenomenal. You can't get much better than that. I did the research. I took the course. I did what they said to do. Okay. I researched it myself. I checked out all the online stuff. It all said yes, 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 yes. And I know it's going to go up now. Next 90 days is going to triple in the next 90 days. Week number 3, it sort of slowed down. It didn't feel too bad. It wasn't going up as fast, but it was still up. It was good. By the end of week number 3, it crashed. He lost almost all his money. $30,000 plus all that paper gain that he had went down to $7,500. That's all he had left. And that's what he's telling me on the call together. He had a serious need, and we let him into the program. And he understood now about what happens with the crowd. You can't follow the crowd. Bad things happen when you follow a crowd. You have absolutely no control. You don't think right anymore when you're following a crowd. You don't think at all. You're just part of the crowd. You're part of the movement. Okay, it was a sad story. Not really a happy ending, but it was an okay ending. He's okay. But the big takeaways, I think, for today would be understanding why the markets actually move and how the charts affect, or really don't affect, your investments, but how it's critical in allowing you to make better decisions. You need to look at the prices. You have to understand the perception of the crowd carries things away. Good or bad, it carries them away. And so it's really, really critical to stay on the outside edge of any crowd. Whenever you see a mass action of something, stop. Sit back for a second. Individually, does this make sense? Don't follow a crowd. Sit on the outside edge and watch it. And then a chart's really, really a simple thing. It really isn't that difficult at all. It's just the price. Open, high, low, and close. Once you understand that, and the fact that it only moves 3 different directions, up, down, and sideways, it's not that difficult to do. I'm glad that you're here for the show. And I want to make certain that I give you some additional value just for being here. And I've got a free gift for you. Go to drrousenow.com/free gift, and you'll be able to download that particular gift. Now, this has helped a number of students in the past. It's helped people who have not even become my students. And they thought it was exceptionally useful. And I want to make sure that you had it and you could use it also, because I think it's going to make a difference in your life. It's made a difference in their lives. And those are reports that I'm getting from people who have actually used it. So go to drrousenow.com/free gift. Download that, get that, use that, and then I look forward to seeing you on the next show. Yeah, 'cause Dr. Fred's got your back.